Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Positive global cues lift Dalal Street. Sensex gains over 500 points. Nifty reclaims 22,000. Mid-cap index snaps a 4-day losing streak, recouping all the recent losses. The US Federal Reserve sticks to the script, keeps key interest rates unchanged. Fed chair says that inflation has eased considerably but still remains too high. However, stays on track for the 3 planned interest rate cuts this year. Federal Reserve maintaining its 3 rate cuts plan sends spot gold prices to a record high of 2,220 rupees per ounce. Shares of gold financiers like Muthoot Finance and Manappuram Finance rallied on the move. Novartis Global CEO Vas Narasimhan says the strategic review of the listed Novartis India will determine if it makes sense to continue running the business, but clarifies that the review is not due to any pricing policy in the country, adds that investments into unlisted entity Novartis Healthcare will continue at a steady pace, with headcount set to rise 10% this year. That's an exclusive. The insurance regulator is likely to have approved new surrender value regulations that may provide some relaxations to life insurers. Final rules will be notified next week. Sources say that the regulator has also approved Bima Sugam, a platform that gives customers the option to choose from multiple insurance schemes. Akasa Air founder and CEO Vinay Dubey rules out liquidity issues, says the airline has an extremely strong cash position, adds the airline is looking to start flights to Riyadh and Jeddah in the second half of summers. He also expects Akasa's FY24 growth to create history in global aviation. Patanjali Ayurved and its managing director Bal Krishna issue an unqualified apology to the Supreme Court. This after the court issued contempt notices over Patanjali's misleading advertisements. Yoga Guru Ramdev has not apologized to the court yet. Supreme Court refuses to stay the appointment of 2 new election commissioners just days before the Lok Sabha elections, but pulls up the government over the appointment process and questions the tearing hurry when the matter is sub judice. Supreme Court stays the government's notification on the fact-checking unit, directs the Bombay High Court to assess the impact on right to free speech. The rules empower the union government to monitor and flag alleged misinformation on the business of the centre. Supreme Court lashes out at the governor of Tamil Nadu for refusing to swear in DMK leader Ponmudi as a minister despite a stay on his conviction, gives the governor 24 hours to reinstate the minister and orders him to act as per the constitution. The Congress top brass hits out at tax notices, says the IT department has sought details from an assessment year 3 decades ago when Sitaram Kesari was the treasurer. Sonia Gandhi alleges that a systematic effort was underway to cripple the Congress financially. BJP President Nadda tweets that the Congress is conveniently blaming their irrelevance on financial troubles. More than 100 Palestinians killed in Israeli attacks in the last 24 hours. Overall death toll nears 32,000. US unveils a new draft UN resolution seeking immediate ceasefire and release of hostages. US Secretary of State Antony Blinken is touring the Middle East once again. Right, first up, the markets gained across the board after the US Federal Reserve stuck to the script and kept key interest rates unchanged. The Fed has also stayed on track for the 3 planned interest rate cuts this year. Nifty and Sensex ended over 0.5% in the green, but it was the mid-caps that stood out. The index snapped its 4-day losing streak to regain losses of the last 4 sessions. Prashant Nair is here with the day's trading action. Prashant.
A strong day, and it was expected to be a strong day after the handover that we got from Wall Street. The Fed said that no matter if inflation keeps popping up, rate cuts are inevitable. I think that was music to everyone's ears. And you had a 1%, 1.25% higher close overnight markets. And today, in the morning, we got a decent higher start. The thing was, we didn't sell off, and the market built on in a small way, especially in the broader market, mid caps and small caps on the way up. The Nifty is up on your screen. The Nifty Bank, which as of yesterday's close had fallen for 9 straight sessions, also saw a decent recovery. Mid caps and small caps, 2% on both those indices, and that's where the pain has been as well. Now, in terms of themes, PSUs did well, and you'll see why I'm saying that. So in the Nifty, gains coming through in names like BPCL, NTPC, Power Grid, Coal India. These were the 4 biggest movers on the Nifty index. IndusInd Bank and Tata Steel also participated in the upside. In the broader market, advances far outnumbering declines, and that's a welcome change. Usually for the last many days, we've had the opposite. Again, long list of PSUs, PFC, REC, Engineers India Limited, NALCO, Hindustan Copper, MOIL, and so on and so forth. Exchange and capital market plays like BSC and CDSL also participated. There were other names from the capital goods manufacturing theme. There was CG Power, Action Construction Equipment, Amber, GMR Infrastructure, NCC, and a bunch more. eMudra was sharply higher. There was Muthoot, which did very well today. Intellect Design, Sona Comstar, HEG, and I could go on because today volumes also came back. Volumes have been the missing link for the last few trading sessions. On the downside, I mean, just a few names. Paytm, which had been moving circuit to circuit for the last many days, pulled back a little bit. Metro was up 10% yesterday. That was down about 3.5%. And something like a Rainbow Hospitals. These are just pullbacks after sharp prior day rallies. Rainbow was sharply higher on Wednesday, and today it ended about 3.5% lower. But broadly, it's a welcome relief. The broader market, of course, outperforming the Nifty by miles today. Back to you.
Right. Thank you, Prashant, for that comprehensive update. Moving on, gold prices hit an all-time high after the U.S. Federal Reserve maintained its projection of 3 interest rate cuts for this year. Spot gold prices surpassed the $2,200 per ounce mark. As per Citi, the prices could rise to $2,300 in the second half of 2024 back home. The shares of Manappuram Finance and Muthoot Finance, which provide loans against gold, surged in trade. The insurance regulator has approved a series of proposals in its latest board meeting. It has cleared new surrender value regulations that may provide some relaxations to life insurers. Yash Jain joins us for more on this. Yash, what are the key decisions?
The Insurance Regulators Board met very recently, and this board meeting was particularly very crucial and important for that one agenda point which was to be discussed and an approval was expected. That was around the surrender value which is paid by life insurance companies to the policyholders in case of an early withdrawal of the policy. What we've picked up from our sources is is that the insurance regulator has approved the surrender value regulations for life insurance companies. Of course, a proposal on this one was released by the regulator in December 2023. That proposal spoke about increasing the surrender value by as much as 2 times to what it is today. And if that proposal would have come in the form that it was proposed, then insurance companies would have been able to retain just 57%, just 17% of the premium which they collect from policyholders as compared to 57% which they retain in surrender charges today. Now, what we've been given to understand is that insurance companies had put forth their suggestions on surrender value. That was incorporated by the regulator, and certain changes in favor of life insurance companies have been approved as a part of the final regulations on surrender value. Not just that, the final regulations of surrender value are expected to be released by the regulator by as soon as early next week. What had the insurance companies suggested? One was, put surrender value depending on the duration of the surrender of the policy. So if a policy surrender, is a longer duration, then the policyholder could be eligible for a higher surrender value. But for early surrenders, the policyholders could only get lower or no surrender value. That was the proposal which was put forth by life insurance companies. We need to see what comes as a part of the final regulations on this very important topic of surrender value.
Right. Thank you, Yash, for that update. The big news maker this evening, in an exclusive conversation with CNBC-TV18, Novartis Global CEO Vas Narasimhan has said that the strategic review of the listed Novartis India will determine if it makes sense to continue running the business. However, he has clarified that the review is not due to any pricing policy in the country. Speaking to Shireen Bhan, Narasimhan added that investments into unlisted entity Novartis Healthcare will continue at a steady pace, with headcount set to rise 10% this year.
And we'll have to see now, as we've started the strategic review, what kind of offers we get. Is it better for us to continue to own this listed entity, or to partner it, or to sell it to another logical buyer? So we'll see how it goes. Too soon to say at the moment.
Has price control been an issue and a challenge as you operate in India on the commercial side? Because I'm given to understand that almost 30% of the brands under Novartis India are under price control.
Certainly, we think the pricing environment should improve in India for innovative medicines. However, our strategic thought here is not driven by any specific pricing policy. It's really much more in the long run. Are we the logical owners of a business that's housing much more established older medicines than our current focus?
So the focus on Novartis India, whether it is or you believe that it's no longer a strategic fit as you look at the future, but you want to continue to double down on healthcare?
Well, when you think about NHPL, which has our exciting new launches, incredible medicines like our medicine Cosentyx in immunology or Entresto for heart failure, we continue to invest in those new medicines and those new launches, wanting to bring them to as many people as we can within India. But then also when you think about this Hyderabad center, our Novartis corporate center, which we really consider as one of the extensions of our headquarters in Basel and some of our major sites in East Hanover, this is now an 8,300 person operation in India. We're growing 10%. I would expect us to be at over 9,000 people by the end of this year. And I would foresee us to continue to grow at a double-digit rate as we continue to build out capabilities in R&D, in IT and data science, as well as all of our core functions. Two areas we're now looking to invest into Hyderabad are in research, so basic research, which would be a significant expansion of our current footprint, as well as expanding our U.S. marketing operations as well into India.
Okay, so you're expanding the operations at Genome Valley, which is where you have your facility, as well as expanding operations here in the facility that we're currently at. What would that typically mean in terms of incremental investments?
Well, if you think about our total dollar investment right now, it's around $400 million annually we invest into India, and we estimate that actually translates into around $1.5 billion of investment into the entire ecosystem. So we would expand 10% in terms of people. I don't have the exact dollar figure, but I think you could assume that continued steady investment into India through these various footprints.
And you can catch the entire conversation with the CEO of Novartis at 7:30 and 9:30 p.m. right here on CNBC-TV18. Shifting gears now, Patanjali Ayurved and its managing director Bal Krishna have issued an unqualified apology to the Supreme Court. This came after the top court issued contempt notices over Patanjali's misleading advertisements. However, Yoga Guru Ramdev has not apologized to the court yet. On to a CNBC-TV18 exclusive, Akasa Air founder and CEO Vinay Dubey has ruled out liquidity issues at the airline, speaking to my colleague Danish Anand. Dubey said the airline has an extremely strong cash position. He added the airline is looking to start flights to Riyadh and Jeddah in the second half of summers. He also expects Akasa to end FY24 in a growth trajectory that hasn't been seen in global aviation history.
I will say, two things in terms of finishing FY24. One is, financially and from a cash perspective, in an extremely strong position. So that's the one thing, I will say that we've built this, rock solid foundation when it comes to both the business model and when it comes to being capitalized and cash. And that's one way we expect to end FY24. And the second way is, in a growth trajectory that no other history in global aviation has ever seen. And the third thing is we expect to end I know I said two, but I've got the third. We expect to end FY24 as India's most on-time and most reliable airline.
All right, it's time for a short break, but coming up next, Supreme Court refuses to stay the appointment of 2 new election commissioners just days before the Lok Sabha elections. Details when we return. Welcome back. The Supreme Court has refused to stay the appointment of 2 new election commissioners. The court, which heard pleas challenging the constitutionality of the new law on election commissioners' appointment, observed that a stay will cause uncertainty ahead of the general elections. However, the apex court questioned the government's tearing hurry. Ashmit Kumar is here with more. Ashmit, take us through what transpired in the top court today.
Well, there are two sides to this story. The first up, what happens on the appointment of the Election Commission? We have two new election commissioners. On that question, the Apex Court gave an unequivocal answer that there is no scope for it in terms of striking down their appointment. That will not happen. That happens only in exceptional circumstances. The Supreme Court defended its position, saying that the elections are around the corner. This will cause complete chaos. So on that front, that question has been answered in the negative. The Election Commission appointments will continue. But on the other side, the process of appointment did invite a lot of scrutiny from the top court. The Supreme Court said that even if we let go of the question of the independence of the Election Commission on account of the way the collegium and the selection panel is currently structured, there are still questions with respect to how they were appointed this time around. The question that was asked of the centre is what the tearing hurry was. The Supreme Court asked a very pointed question, in fact, that there were as many as 200 candidates in question. The fate of those 200 candidates, they were narrowed down to just two commissioners in the space of just 2 hours. The question that was asked is that how can a selection panel, they're required to examine all the candidates, how did they go through this entire exercise through application of their mind in just a space of 2 hours, stretching across 200 candidates? So some serious questions being asked as to why the date was advanced in a way as it would defeat the hearing before the Apex Court altogether. So some tough questions there, but the larger question with respect to the appointments, they are likely to continue, no change there by the Apex Court.
Right. Ashmit, please stay on. Let's also talk about the other big story that you're tracking, which is that the Supreme Court has stayed the government's notification on the fact-checking unit. Could you please take us through what the court has said and what does it mean for the government now?
Well, this is a big setback. Just last evening, we were talking about how the MeitY, the Ministry of Electronics and IT, and gone ahead, had notified these IT rules on fact-checking unit and had allowed for implementation. Now, here's the backstory to it all. The entire issue revolves around fact-checking units under the IT rules. Under the IT rules, the government envisions a government-backed fact-checking unit that will go on social media, will flag false or fake content. Now, the very constitutionality of these IT rules are currently under challenge, is being heard and decided by the Bombay High Court. But in the interim, on the 11th of March, the Bombay High Court had allowed the centre to go ahead and to implement these rules. Now, the implementation of these rules was challenged before the Apex Court. The question that had been raised before the top court is that if these FCU rules are provided for, are implemented, it will mean there will be a freeze on free conversation, on free speech, that coming ahead of the elections, this will only prompt only favourable coverage of the government. There will be no critical commentary on the conduct of the government. On that count, the Apex Court, after hearing about a 90-minute-long hearing, held that there are prima facie more than enough grounds that have been raised by the petitioners for staying the implementation of these IT rules. So a stay order has been issued, and with that, a direction has been issued to the Bombay High Court that when they do decide this matter, the scheduled date of hearing is April 15th, they have to take into account questions of constitutionality and questions on how the FCU, if at all, impinges on the fundamental right to free speech.
Right. Thank you, Ashmit, for this update. Shifting gears now, the State Bank of India has filed a compliance affidavit before the Supreme Court in the electoral bonds case, saying it has submitted all the details, including the unique codes that will reveal the link between buyers and the recipient political parties. The Supreme Court lashed out at R.N. Ravi, the governor of Tamil Nadu, for refusing to swear in DMK leader Ponmudi as a minister despite a stay on his conviction. The court gave the governor 24 hours to reinstate the minister and ordered him to act as per the constitution. Election Commission has ordered the union government to stop sending a letter by Prime Minister Modi to people on WhatsApp through an account called Viksit Bharat Sampark. The EC has ordered the government to file a compliance report immediately. The move comes after opposition parties accused the government of violating the rules by sending these messages to the public after the Model Code of Conduct took effect. The Congress top brass has hit out at tax notices. The party, while addressing a press conference today, said that the Income Tax Department has sought details from an assessment year 3 decades ago when Sitaram Kesari was the treasurer. Sonia Gandhi, who made a rare appearance, alleged that a systematic effort is underway to cripple the Congress financially. BJP President JP Nadda responded on X, saying, and I quote, "The Congress is conveniently blaming their irrelevance on financial troubles," end quote.
Systematic effort is underway by the Prime Minister to cripple the Indian National Congress financially. funds collected from the public are being frozen, and money from our accounts is being taken away forcibly. The electoral bonds have benefited, as everyone knows, the BJP hugely, massively. On the other hand, the finances of the principal opposition party, the Indian National Congress, are under a determined assault.
आपकी पार्टी अपील में गई, आपकी पार्टी आईटीएटी में गई, आपकी पार्टी हाई कोर्ट में गई, आपकी पार्टी सुप्रीम कोर्ट गई है। आपने क्यों छुपाया? और जैसा हमने बताया, इनकम टैक्स में इस बात का प्रावधान है कि अगर आपके पास ड्यू है, आप ड्यू नहीं देंगे तो रिकवरी में आपका
And with that, it's a wrap on this edition of Business 360. More news and updates continue on the other side. Stay tuned to CNBC-TV18.